Hey everyone, if you've been looking at innovative growth stocks to buy, I've got an interesting comparison here today. Rivian versus Plug Power. Which of these innovative growth stocks is the better one to buy? I'm going to compare them and answer that question in this video. So let's get started comparing these two on revenue. And Rivian looks to be growing faster, explosive growth here from 2022 onward, 661 million in revenue compared to 210 million in revenue for Plug Power, and the growth is slower than Rivian. The next metric I wanted to compare these two on is cash flow from operations in the most recent quarter, going back as far back as I can, 3 years for this comparison because Rivian only started generating revenue in mid 2021. And looking at this metric, you could see they're both moving in the wrong direction, although Rivian is losing way more money and losing it faster than Plug Power. Lost 1.5 billion in revenue in its most recent quarter. 1.5 billion in cash in its most recent quarter, while Plug Power only lost 276 million, if you could say only 276 million in the same sentence. But the trend line of losses, the slope is much smaller for Plug Power compared to Rivian. Rivian has said it doesn't even expect to achieve gross profit positive until the end of 2024. So still a long way to go for Rivian to generate positive cash flow from operations. So since these two companies are losing so much cash from operations, I wanted to look at how much cash they have on hand, and Rivian investors can at least be reassured that the company has $11.2 billion of cash on hand, while Plug Power has 475 million of cash on hand. Looking at their most recent quarters, it appears that Rivian has the longer runway in terms of the cash balance compared to the cash flow from operations, but these figures can be misleading because a lot of times companies generate cash through stock sales or borrowing in between quarters, and this data looks at quarterly figures, so it may not be entirely up to date in terms of the cash that they have on hand. Also, between the timelines, these companies could have changed their cash burn rate by laying off people, by reducing costs, and so they can make adjustments in order to give themselves more runway before they need to go back to investors and say, can you please give us some more money? We've run out of all the money that you've given us already. Just to get to this point, we need more money to get to the next milestone. So Rivian investors can be a little bit more reassured with that cash balance, although I don't know how much reassurance you can have when the company you're investing in has just lost $1.52 billion in the most recent quarter in cash, and the trend keeps getting worse. Finally, I wanted to compare these two on valuation, and I chose to use the forward price to sales partly because my choices were limited. These two companies are not profitable, they're not generating cash flow positive, and so I was limited and I chose to use the forward price to sales. And according to this metric, they're similarly valued. Plug Power at a forward price to sales of 3.6, with Rivian at a forward price to sales of 3.3. So, if I had to make a choice today on which one of these two innovative growth stocks I would rather buy, I think I would go with, it would be close, but I would go with Rivian because of the larger addressable market Rivian operates in with electric vehicles and vehicle sales overall. It's a bigger market with larger sales overall, and so I think the potential is higher for Rivian. And at this point, these two stocks are, the valuation is mostly about potential, and so for that reason I would go with Rivian as my stock to buy between these two. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.